Valuations are getting up there when it comes to EMs as well, although not as stretched as what we're seeing across developed markets. What scope do you see for further opportunity in the second half of the year? And I suppose, what are the main drivers, in particular, where you see the US dollar headed?
Sure. So I think that's a great place to start as we end the second quarter here, where we had one of the strongest recoveries in asset prices after a truly dreadful first quarter for emerging markets. But it was a mixed recovery at best. You hinted at the EM equity performance, which really showed significant improvement and catch up along with that broad rally that we saw in global markets. However, we haven't seen as much of a rebound, particularly for emerging market FX for currencies, been slightly more muted with only around a 2% rise versus the dollar over the last quarter. And that partially has to do with how we see the dollar path evolving going forward. It's been one of those things where a stronger dollar has been a steady backdrop for the last year or so, and we're only just starting to see that some of that strong dollar momentum is fading as the U.S. starts to lose some of both the high-yielding status that it's enjoyed for the past few years and also some of the safe haven appeal that it had, particularly at the start of the crisis.
So the interesting thing when it comes to, I suppose, the macro picture is that we do expect some of the countries in the EM space, particularly here in Asia, to come out of this quicker and perhaps, with more robust recoveries than across, say, the US, for example. So is that where you'd be focusing some of your attention in that sort of first in, first out domestic story?
We are still focused on those regional differentiations and certainly looking at Asia, particularly North Asia, as the first countries that went into the pandemic and are since starting to resume this post-COVID normal life. In particular, we started to see that people are returning to shops, workplaces, governments are loosening lockdowns in North Asia, and that does provide a positive signal for the rest of the global economies that we track. Just recently, the Australia PMI came out at 51, slightly better than expected, and we've got a slew of PMI data coming out in the next few hours, ranging from Malaysia, Indonesia, South Korea, and also importantly China, to show exactly how those recoveries are forming and whether it's going to be this sort of bounce back that we see in the countries that first ended up being the ones unfortunately impacted by the pandemic. But we are looking to Asia for that rebound.
Who are the laggards across Asia, and do they present opportunities?
There are some opportunities there, certainly. We've seen differentiated performance within the APAC region, and in particular, I think two countries that stand out to me. First of all, the South Korean won has been an underperformer year to date in the Asian space. Given the fundamental story and the backdrop there, it seems there's a case to be made for further catch-up in the Korean won. And then additionally, India actually stands out to me as a country where they've somewhat lagged the rest of the rebound that we've seen in the rest of Asia, and we would expect them to sort of steadily improve, especially if the picture remains slightly more risk-on and we have this more accommodative backdrop on the economic side.
How strong a stomach do you have to be able to invest in those economies, given the volatility and the uncertainty in the macro environment right now?
Yeah, unfortunately, the COVID pandemic and the subsequent impact on growth is a major headwind, and we've seen that for all of this year. And as this virus continues to have a heartbreaking toll, that's certainly something that we're continuing to watch. At the same time, there are some tailwinds now developing for emerging markets. I mentioned the dollar, and that the dollar turning is a net positive for emerging markets as it impacts everything from inflation to exports, earnings, capital flows. And then on top of that, you have this unprecedented level of liquidity coming from fiscal and monetary stimulus. And while that has started to slow somewhat, that backdrop is still very much there globally. And as global money supply has surged to the highest level in decades, it does provide somewhat of a backdrop for investors to go slightly further into risk and increase that risk appetite. Although admittedly, like you said, there are a lot of potential risks to watch.